Hi, everyone. My name is Bruce Truman. We're glad you could join us for a year-end inventory discussion. Really excited to be here with a great group of experts. The year is coming to a close, and we wanted to put this panel of experts together because there's things you can do right now. We know it's December 6th, but we still have a few weeks before the year-end close. So there are some high-impact items you can do right now. We're going to go over those to help with your financial performance. The idea here is after you listen to this panel of experts, listen to this webinar, will be able to take things right now back into your practice to help with your year-end close. The goal being to make this year close for you really strong. And the team of experts that we've assembled also want to focus on 2025. How do we create success for you in 2025? So what I'd like to do first is have our experts introduce themselves, and let's start with Mary.
Hey everyone, I'm excited to be here. I'm Mary Kosha. I'm a 12-year industry veteran. I started at a privately owned specialty emergency clinic in northern New Jersey, just receiving boxes and stocking inventory. With a lot of luck, a love for data and vet med and mentorship from some brilliant finance and procurement leads. I progressed from purchaser to supporting a national group of purchasers to eventually building out a supply chain for an emergent national network. And then now as a senior business analyst for Inventory Ally, I actually get to build the tools I really needed in my roles. So it's just a little bit about me.
Thank you. That's really fun. And now, before I go to Michelle, a couple of things I should have reminded everybody about. If you have questions, we want questions. So we have a team behind the scenes that's helping us watch our time. So any question you have, please ask, and we will see it and make sure we get it answered. Also, everybody, please hang on to the end of this. We got something fun for everybody at the end of our webinar. So with that said, Michelle.
Hi, Michelle Masacchio with Fit Money CPA, where we propel veterinarians to their wildest dreams practices through hindsight, insight, and foresight. Been doing this gig for a while, and the why am I in the niche of veterinarian medicine? I am a huge cat fan. Unfortunately, just lost one over the weekend, and I want my veterinarian to concentrate on my kitties, not on their finances. That's where I come in. To help you support your finances.
Wonderful. Thank you. Monica.
Hello. I am a veterinary management consultant that's been in the industry for a very long time. I got my start being a hospital administrator for a 9 DVM, 7-day-a-week Eastern Western practice in Raleigh, North Carolina, where I live. And those years of experiences definitely help in what I do on a day-to-day basis. So although I'm not in private practice anymore, consult with practices across the nation, and there is not a day that goes by that inventory does not roll off of my tongue. So excited about this webinar.
Thanks, Monica. And last but not least, Andrew.
Hi, thanks for having me. Andrew Pearson. I'm originally a native of Nashville, Tennessee. Been in this industry a little more than a decade. Started off in private practice, small group practice as a practice manager, again, inventory. I've really dabbled in all pieces from marketing. I got into the industry, again, I guess through my wife, who's an equine veterinarian. My brother is a small animal veterinarian. I cut my teeth in equine, but have seen both large and small animal practice. My wife and I have relocated to the Raleigh, North Carolina area, where I currently am our business operations analyst for Vets Pets. Small, mid-sized corporation in North Carolina only, but a little over 30 practices that we support. And our team does everything from technology implementation to, again, inventory and helping their practices really succeed.
Great. Thanks, Andrew. Really appreciate it. We're going to go into our first topic, folks, and want to hear from everybody. And also everybody on the line, please ask questions and we'll get them answered. Let's start with year-end inventory counts, right? That's some fun stuff, right? Counting inventory at the end of the year. But there are really two critical reasons here that you want to do that. We want to ensure accurate financial reporting and tax compliance. That's critically important. Another fun thing's taxes, right? And also you can uncover insights in terms of optimization. What I'd like to start out first is talking about these inventory counts at the end of the year that are so important. What are the tips for planning this inventory count at the end of the year? Anyone can chime in here. Mary, Andrew, whoever wants to start.
I'll take the lead if you don't mind, Andrew. On the planning piece, I would say one of the most important things is to get your count sheets together. You really want to make sure you have a clear product description for your counter. Make sure that the location's included and that you have your unit of measure listed to count, whether you want to count by the bottle or the tab. It's really important that the counter knows what unit they're counting by. Numbering count sheets is a great and easy way to prevent a missed sheet or duplicate entry so you don't have any misstated financials. And then a time and date and initials of who counted on the count sheets are all standard accounting requests as well. I would say if you use an inventory technology like Inventory Ally, your system can actually help you with that task. And the next one, which would be layering in your product costs for total value in hand by SKU so that you can get those data and insights. Andrew, you have anything to add to that?
That's a huge piece of it. No, thank you, Mary. Again, count sheets, making sure those unit of measures are clear and accurate for the counter can certainly skew your totals, especially if you use Excel to then calculate that. Certainly staffing, again, perhaps everyone's involved at your practice, perhaps only it's a select few. We typically take the approach that less is more. The fewer hands in that pot, oftentimes the more accurate those counts are. Make sure you have, again, clear expectations of when it's supposed to happen. I know December 31st is on a Tuesday. It is in the middle of the work week this week. So, are they going to do it in the afternoon? Are you guys going to close down? Or are they expected to stay afterwards to count? Or are they coming in on the first? If you're a 24-hour practice, all things to consider on that end for sure when you're preparing and getting your team ready for those end of year counts.
Thank you. And we will have, I know folks are taking notes on the line on the webinar, but there will be some information shared with everybody at the end about what we're discussing, which will be really helpful. So Mary and Andrew, I was listening to you and I'm like, okay, that makes sense. That's great. But where I went next is, wow, there's a labor strain here at the end of the year. We haven't resourced and planned for this. So Monica, could you make some comments on this about year-end counts? Sounds like a lot of overtime to me.
Yeah, well, if you're not planning correctly, it certainly can. And the practice that I used to manage and when I'm consulting, I do advise trying to schedule or plan your team schedule at least a month in advance. So my end of year count, December 31st, I was actually beginning to prepare in September. I had a very large staff of nearly 100. So I know that I am unique in that regard because we would have people sign up for shifts. My technical team, they were the counters. My front desk CSRs, they were the data entry people. So they would take those sheets and then enter them into our system. So it was a dual process. But ultimately, the way that we would schedule is that you had to have at least 2 inventory shifts. And that became a part of your work week. So, 38 hours, if it was a 40-hour work week, I'm speaking in ancient times because I know no one works 40 hours, right? But anyway, if you schedule them normally for 40 hours, 2 of those would be inventory, and then the other would be obviously when they would be on the floor as a CSR, as a technician. So I work with my leads, and we had all of that mapped out really in November as to how the schedule would look because they had already signed up for their inventory shifts.
Thank you. I can imagine. Thank you, Monica. I can imagine we have people on the line that haven't even thought about this yet. And we're in December. And boy, you mentioned September. Any advice for somebody that's listening now that
Yeah.
hasn't done any planning and needs to get ready? I'll open that up to the group, whoever wants to crack that one, because that's only human nature, right? We procrastinate.
Oh, well, I'm just going to chime in with this because I used to call myself a procrastinator, Bruce, but running a busy practice, I don't call myself a procrastinator, but more of pressure prompted. So I started planning September in advance because I waited a little too long previously and it just got to be too much with such a large practice. But you have plenty of time. As Bruce said, we're December 6th. I think that you could either take today or Monday and you can look at your schedule for the remainder of the month and you can adjust. Hopefully your team understands and you've communicated that this is before you. If not, people understand. You just have to be transparent. Just let them know, this is something that I would like to rectify, but we're here, we're in a crunch and I need for everyone to pull together. And make it as fun as you can, as far as maybe some incentives to get them there and excited about being there on the 31st.
Okay, thank you. So I'm starting my count. I'm thinking about all of this. What do you recommend in terms of involving vendors and suppliers? So for my panel here of experts, would you recommend involving suppliers and vendors in this process or not?
I'm going to be the first one to speak up and be like, oh, heck no. I'm sorry. But like, so I've seen this.
You can disagree. You can disagree with her, folks. Okay.
But yeah, for me, I think the use of vendors comes down to if you have a broken process and your process isn't working. And so now you're overwhelmed or overloaded. And it's almost like a passing the buck, right? The first time I counted inventory, I actually brought my pajamas to work for an entire week. I worked in a large specialty emergency like Monica's talking about. I wish, Monica, I had your ideas to utilize my entire team. Inventory is a team sport. But unfortunately, I did not, and I took a lot on my shoulders myself. However, involving suppliers would have just been passing the buck of that work. And it would have, at least in my opinion, wouldn't have made my financial statements real secure because I'd be using someone from outside of my business.
Okay, thank you. Before I take any other thoughts on this, we did get a question from our attendees. The question is, which items actually need to be counted and what information do I need to give to my accountant?
I'll hop in.
Yeah.
So obviously inventory control is extremely important throughout the year. And I know we're going to get a little more in depth into it throughout the webinar, but counting inventory is not just something you should or have to do. There's reasons to count inventory. One reason being that states tax the inventory that you have on hand. So you want to make sure that you have the lowest inventory that you possibly can. And so which items need to be counted? All of them. And again, back to Mary's point, it's do you want to count them by pill, bottle, however you choose that item to count is fine. And then what you give to us as your CPA is that cost of that inventory. Because what we want to do is we want to true up your cost of goods sold. And again, that's how it affects your financials. So it's going to hit your profit and loss, and it's also going to hit your balance sheet. So we want the cost of your inventory.
And
Okay.
Michelle, can I ask for clarification? When you say everything, typically, advising pills, bags of food, your hospital white goods, 4x4 gauze, things along those lines. We weren't required to count inventory, equipment, because our accountant already had dibs on that, and we were meeting with our accountant monthly. Do you recommend equipment be accounted at this time?
So equipment really is not your inventory. That's
Yep.
going to be your fixed assets. And you are correct, Monica, that we have that fixed asset listing in our information, and we utilize that to calculate your depreciation, which is a whole nother topic that we can go over in another seminar. But excellent question. That the equipment itself is not counted as part of that inventory.
Yes, thank you.
Absolutely.
Great. Thanks. Mary had a pretty strong opinion there on suppliers, and I can share with you that early in my career, when I spent a lot of time in veterinary practices and made sales calls, I would love to be a supplier that helped on inventory count, right? I'd love to get into the veterinary practice for a bunch of different reasons. Anybody have a different thought on that? Are we aligned that it's probably not something that it's something that we want to do on our own, independent of any of our other relationships?
I vote
personally
for independence.
Go ahead, Michelle.
I was going to say I vote for the independence because, again, once you bring other people inside the practice, it can get a little messy.
Gotcha. Okay. Thank you. Thank you.
I would also agree, Bruce. I will point, certainly not involving your rep in the count. However, the tools that you have access to, especially if you utilize a program like VetCove, where you can pull your order history and such, certainly utilize those tools. But inviting your reps in to help with the count certainly wouldn't encourage.
Okay, thank you. I have another question from everyone on the call. What about white goods? Does it matter if boxes are open, or do I just count unopened? Like, how do I do that?
So I'm going to give from my perspective, and the technical answer is yes, you need to count the items in those opened boxes just to see how many you have. Now, in reality, you can guesstimate how many you have. You've got 10 boxes, you count those, multiply them, and then maybe add 3 or 4 for the open boxes.
Okay, thank you. Well, but what about things? This is another question. It's a good one that I would have never thought of. What about brooms and non-consumable items? Are those counted as inventory?
They are not. So the broom would actually be, it's not a fixed asset, but it's another asset in your business. And it really goes under, excuse me, either cleaning and janitorial or office supplies. So something like that you do not count. And then I'm assuming the non-consumable consumables you're referring to are the office supplies. Now, in Kentucky, where I am, we do have a line on our property tax returns for those supplies. So, and again, you can take a good estimation of those because you've got to weigh the cost benefit analysis on this, and you don't want to go and count every single paper clip that you have. So common sense is useful here.
Okay.
And I think also checking with your CPA. Obviously, we work with practices across the United States, and as Michelle is saying, sometimes it's where you are. So I think the most appropriate thing to do is to, if this is your first time doing this, don't be nervous or scared. This has been done for umpteen years, and it will be done for many, many years. Just tap into the resources that you have. And I personally feel, because I work with so many practices, my smallest practices I worked with was 1 doctor, 1 team member. So if I'm going back to, would you tap into reps or, folks like that? I think it depends, really. It's not an ideal situation, but sometimes we have practices that they've just gone through a manager. They lost their manager last week, and now they've got to pick up. And in that case, I wouldn't want someone not to call upon help, but realizing next year, this time, hopefully we've gotten protocols and processes in place that you wouldn't have to rely on those folks. But I don't want anyone to go into this losing sleep, bringing pajamas to work. It doesn't have to be that overwhelming. So.
Okay, thank you. What about inventory valuation methods, FIFO, LIFO? How should they do inventory valuation in terms of financial reporting?
So do you know what those terms mean? Or are we just throwing them out there?
I think we should define those terms. Absolutely.
So FIFO is first in, first out. So the first items you bring in are the first items you're going to utilize, either sell or utilize in the procedures. LIFO is last in, first out. So as it says, the last item you bring in is the last item or the first item you're going to put out. And then there's the weighted average of inventory. Just as it says, it's that math thing that we all hate, but it's just taking the average of all the inventory that you have and utilizing that. Now, when you think about you're holding on to, there's a lot of expiration dates. So obviously you have to be very cognizant about that. And again, in my opinion, and you can ask 10 CPAs and get 10 different opinions, but in my opinion, the FIFO method is the best way to go for veterinarian practices. Again, because you're paying attention to that expiration. You're not letting things sit on your shelf and wasting money by expiring.
Great, thank you. Let's switch gears here. We've talked about the inventory counts. I'm sure there are individuals on the line that maybe just placed a big order a couple weeks ago and they have a lot of inventory and now I'm nervous, right? So how do I optimize that inventory? We want to talk about that. I've only got a few short weeks here, but are there ways that we can do some quick fixes to reduce inventory carrying costs or COGS within a month? Anyone?
Well, I would say if you just place a big order, you probably are going to have to just keep that and move that the way that you normally would. I probably would focus on the things that have been in the hospital and try to reduce those as much as you can. So checking, you run your inventory reports and things that are about to expire. See if you can return those for credit or return those and get items with a longer shelf life. But if you've just gotten a really big order in, hopefully you've done your due diligence and you can, turn those items so that they only have a shelf life of say 30, 45 days and that you're generating the revenue come January when the bill is going to be due.
Okay, thank you. Any other additional comments on these quick fixes?
I think Monica just had a great call out over the turn rate of the items and just making sure, just generally, not just a quick fix, but generally, really being keyed into your turn rates, especially as you're coming to end of year. When you think of cost of carry, you might have a lot of suppliers looking for an end of year deal. Should I get like all this new inventory? Should I take this 10% discount kind of thing? But to Monica's point, if you are carrying more than 30, 45 days on hand, you could be really hurting your bottom line.
In case we have sorry, go ahead.
Now, I was going to say, I think it's important because, realize that we have a spectrum of folks doing inventory, some that are very green and some that are obviously seasoned. But you probably have heard terms like just-in-time inventory, or I remember during the 08-09 recession, reduce your inventory. So usually at this time of the year, as Michelle is saying, the reason we're having you do an inventory account is that you're reporting that information to your accountant and you're having to pay taxes on inventory. So ideally, you don't want to have any more than you necessarily need to, run as efficiently as possible. So I would say that, typically the last quarter of the year, I wouldn't necessarily look at increasing inventory unless there is a legitimate strategic reason for doing so. We might talk about Section 179, and that's dealing more with like equipment purchases. And we do encourage those depending on cash flow and budgeting and things along those lines. But, really like medicine, medications, your drug supplies, those type things, I think that toward the end of the year, you don't want to make bulk purchases unless it's, like I said, for a justified, valid reason.
Okay.
Well, and you definitely said one of the key words is cash flow. So, by not bulking up on this inventory, you're leaving that cash available for other uses.
Okay, thank you. There was we have some new people that are joined, on the call, on the webinar, and we use the term that I think everybody knows, but let's just define turn rate, just so that there's a standard for everyone.
I can give my non-official explanation but Monica is the CVPM. Do you have an official explanation for the turn rate or cost of carry?
No, not official.
Okay, perfect. But to me, and just in my layman's terms, it's the amount of time it takes you to use inventory. There's some real simple methods of calculating. If you look up something called the red dot theory, it's an easy way to kind of start understanding the turn rate of the supplies and inventory in your hospital. Or conversely, if you're using some inventory technology, not to keep saying Inventory Ally, but like Inventory Ally, it can help you kind of target and by SKU the turn rate so you don't have too much or too little that you're really optimizing.
Got it. Thank you.
And establishing those like reorder points, reorder quantities for your inventory items, those are the things that are going to make sure that your turn rates, fall where they need to. 30 to 45 days, say for Clavamox, that's fine. But that should not be a turn rate that you've established for your food. So obviously, depending on what the item is, you have to take that into consideration. Things like Solu-Delta Cortif, I don't even know if that's still used, but ultimately in an ER practice, they would turn that fairly quickly. In a GP practice, we might have it expire before it actually is ever used. So a 30, 45 day shelf life for something like that drug in a GP practice is not realistic. So using your historical data and seeing how often you had to purchase something, that will give you some guidance. And that's where I feel like reps can come in handy. If you don't know how to set those reorder points, reorder quantities, they can help you in that regard.
Okay, thank you. And don't forget, if you have a question, please put it in the chat. We're doing fine in our time, so we want to answer any questions you might have. Y'all just spoke about reducing inventory, and I'm obviously not an inventory manager, boy, but if I have the mindset of an inventory manager, you just told me, techniques or tips to reduce inventory. Now I'm concerned about running out and disrupting patient care. Mary, why don't we start with you, because this makes me nervous. I don't want to run out.
Listen, that is like the heartbeat of every inventory manager across veterinary medicine is
Right.
We do not want that patient showing up that needs a medication, because it's about the patient care. Like at the end of the day, like we're all here for finances so that we can enable the business to do better so they can treat more patients and take care of these team members. But yeah, if you're worried about the risk of running out, what I would argue is that your fear probably comes from a lack of visibility. And so what I find is, especially in veterinary medicine, we're all data driven. Better data equals better outcomes all day long, whether it's a patient or your inventory system. So what I would say is, if you're real nervous, like Monica suggested, having your historical purchase data, having some real analytics and insights where you can sit down and say, am I making a smart decision? Am I making the right decision for the business? Now you can optimize the quantity on hand you have of each item based on the actual need for that item. So that's really why I keep using that word optimize, is I don't want to just reduce or inflate. I want to have the optimal quantity of everything so I have enough to treat my patients, but I'm not taking on things like those extra taxes Michelle brought up, or even extra labor costs just to maintain and account for all of that extra inventory. So yeah, if you can use good data, good analytics, and have good visibility to that, I think you can make the right decisions for your patient care.
Thank you. And we have an additional question from Bree. We just did a bulk purchase, 3-month supply at the end of November. Our owner thought it would be beneficial to get the product. I've heard this before, folks, right? Our owner thought it would be beneficial to get the product before the cost increase at the beginning of the year. Is this not really smart?
So I'll pop in. If you had asked this question on December 6th, 2023, I would have said, whether it's smart or not, the advice is don't do the bulk purchases. And I think we kind of all agreed on that. But here we are, December 6th, 2024, and we have news that all these tariffs are going to be implemented. So costs could go up tremendously. And we don't have a crystal ball, so we don't know. So I'm going to say in this particular case, it's a very smart move.
Okay. Thank you. Any additional thoughts?
I was going to say, for those that are on the webinar and you feel like you got to, let's go make a bulk rate purchase. I would always think of, regardless of what the price is, if you use standardized or industry markups, you just mark up of what it costs to you. Now, if you're getting it for a discount, we're always going to say markup off the standard, not the discounted price. So in that regard, I get what you're saying as we approach 2025 and we don't know what is before us. But I would say, instead of just hanging up with this, ending with this webinar and just making all these bulk rate purchases, there's more than just, should I do this because of potential tariffs that people have to think about. Cash flow. There's some practices that could afford to do that, and others it would be detrimental if they did. And I'm going to go back to what Mary was saying earlier about relying on your data. Realizing that if you're working with a company like Inventory Ally, you're going to have Invetco. They're going to, make sure that your data is on point. But a lot of times, I work with practices, garbage in is going to be garbage out, and they cannot rely on that data. So I'm going to be archaic, probably one of the older ones on this webinar, which is fine. But before I had all this technology, when I was managing, my inventory manager, I had her create a never run out list. We used Avamark. We could rely on Avamark, as you have other ones that you can rely on, but sometimes you can't rely on it. But her eyes, she could go and make sure that we were never out of isoflurane, make sure that we were never out of euthanol or whatever the case may be. I know that's an archaic way, but you can always rely on something as that simple. So for those of you who feel like your data is not up to par, it may just be very basic. Create that need to know list. And that list was formed by my lead technician and my doctors, and ultimately my lead CSR to give feedback on, these are the things that it seems like we run out of, or that we have clients asking for. And that goes back to Mary, what was saying, inventory is a collaborative effort amongst the team. But that basic need to know list was a definite lifesaver for us.
Okay, I'm going to shift gears here. Any additional comments on this topic before we shift gears to taxes at the end of the year? All right, so let's do that gear shift here and talk about taxes. They're a big part here, and we've been talking about poorly management inventory can really impact taxes. How can practices determine whether to use the FIFO and LIFO that we discussed for inventory evaluation? And can we talk specifically about what are the tax implications of these choices? My
goodness, you want the whole IRS?
What's that?
That's a huge topic you're asking. So we've already, and I'd like to hear some of your all's thoughts too, because I know you're in the practices working with the docs and the teams every day. But again, from my perspective, the LIFO inventory method is a very complex method, and there's always compliance with the IRS. They always want you to follow their little path, and it's very intensive and tedious. Going back to what we talked about earlier, I wouldn't suggest LIFO just because we want to be cognizant of those expiration dates. And from a tax perspective, I'm not sure where you want to head with that, but from a tax perspective, if you're thinking about your COGS, your cost of goods sold, and the medicines and the other items that you have in there, to optimize the tax liability and minimize it as much as we possibly can, obviously we want to show a higher dollar amount in the COGS, because that's going to reduce our gross margin, which effectively reduces our net profit.
Okay, thank you. Any additional comments on that? All right, let's talk about tax advantages here that a practice can gain from documenting or writing off expired or obsolete inventory. I can imagine we're going to do our inventory counts and we're going to come across that bottle in the back that we didn't see that's really expensive. Let's talk about that, folks. And also, I'll remind everyone, if you have a question, please put it in the chat. We want to get all your questions answered here, and we're doing fine on time.
I know everybody loves taxes, so that's why we're talking about it so much.
Yep.
So if we think about it, we've got our balance sheet and we've got our profit and loss statement. And our inventory hangs out on our balance sheet as a current asset. And we don't get any benefit out of it. So going back to Bruce's example here, we find this expired drug and we've got to dispose of it somehow, get it back to the vendor or whatever. So what we do is we're taking it off the balance sheet and we're increasing our cost of goods sold over here. So again, we're getting that write-off that everybody refers to. So a write-off is just another word for an expense. So we're taking it from our inventory on the balance sheet and expensing it over to the cost of goods sold. And then again, that helps us optimize our taxes and our liabilities.
And if I can add to that, sometimes when I'm working with clients, they've never done an inventory count and they never do. They just guesstimate. And that's because their accountant has not asked for that. They just use the numbers that the practice is providing. But why would you want to guesstimate when you could potentially be guesstimating high and then the practice is having to pay taxes on that? So that's why I would rather a practice take the time to do the inventory count so that the numbers and the information is accurate that's being submitted to your accountant. So for our inventory managers that may not be a part of like financial calls that the owner, the manager is a part of, being an inventory manager is probably one of the most important jobs in a veterinary hospital. When you look at the amount of revenue that has to be generated to offset the cost, we don't want those things to get out of sync. So I think just like with recruiting and employment laws that a practice manager has to know about the insides and outs, I think it's important for an inventory manager to understand the big picture. And one of those big pictures is inventory count, not only to make sure things are, set where they need to be internally with the practice, but when you're working with your accountant, it's another component that's really important that has to be addressed. In my case, my accountant had us do a September 30th and December 31st count every year. So if you guys are just having to do 12/31, count your blessings. You didn't have to do it twice. So, but there is rhyme and reason. So don't think that it's just, someone bothering you and bugging you to have to do something. It's a part of the big picture of helping your practice to, have a strong, to be strong financially.
Thank you, Monica. We have a question. And the question is, when you say that inventory is taxed by the state, is it taxed as an individual type entity, or is it taxed in conjunction with the practice's overall profit revenue? I bet our CPA wants to take that one.
That's my question. It is taxed at the property tax level. So, and again, I'm just going to refer to Kentucky because that's where I am. But in Kentucky, we are taxed on our fixed assets. So X-ray machines, anything that you have purchased that's a fixed asset. Then we're also taxed on any inventory that we have on our shelves. And so it's so it's a separate tax, and you might hear it as ad valorem tax, property tax, something along those lines. So it's, yes, it's a separate tax, and then you have the.
Okay, thank you. Any additional comments on that?
No, Michelle can have those questions.
Okay, all right, that's what I thought.
Related taxes to Michelle.
Absolutely.
So I kind of want to flip this discussion in inventory around maximizing deductions. So what if how can a practice decide whether to make an accelerated purchase of some of the high demand items if I'm trying to maximize a deduction?
I'm going to let Monica take that one.
No, you're not.
Okay. Monica or Mary?
Well,
Mary, I
yeah.
think that would be a good one. Yeah.
I can, but I think Michelle should take it. But if you need me to, I will.
Well, I will put my 2 cents in. I don't think that the tax tail should always wag the dog. So going back to what Mary and Monica have been excellent at explaining, that you need to look at your data and you need to take into consideration your patient care, how you are going to take care of everybody that comes through that door. So yeah, we want to lower our tax liability as much as we can, but sometimes it's not just about taxes.
Okay.
And I completely agree in the sense that I've had a couple of financial calls, within the last week or so, and a client saying, should I make this purchase? Maybe it's for a piece of equipment or something along those lines. There was a client that we said, yes, you can make, substantial purchases, and then other clients, because of where they are financially, not at this time. So I think working closely with your CPA to give you guidance and direction as to whether or not you should make that decision is very important. I'm not a CPA, but I work in conjunction with the CPA. And typically during those calls, he's giving the advice and I'm listening. So there's just when you're looking at those P&Ls, those financial statements, it's almost like examining a pet from head to toe. Before you make a diagnosis, you've got to do that exam. And that's what your CPA is doing when they're looking at the whole picture before they would give you guidance on whether or not to make that purchase or not.
Any other thoughts? That was a good one. So if I'm growing practice, here's a question. I'm a growing practice or I'm planning an expansion. How can year-end inventory management decisions impact those practices, like their tax strategy moving forward? So I'm growing or I'm going to expand. What do those practices that are on this call need to be thinking about?
For the growth and expansion, I'm gonna leave all the tax questions to Michelle. So that's gonna be the first. So all tax stuff is gonna go to Michelle. But I think just generally, when you're talking about growing, expanding, the first thing you really want to do is make sure that your finances are in line for the practice you already have. And so you want to take a look at, how do I improve my cost of goods? How do I improve my EBITDA? How do I make sure that I have a very strong, sound financial business before I go on and add another layer and another layer onto it? So I'm gonna beat the data train to death, or the data train to death, but it really is. It's, taking a look at, okay, where are my COGS now? Where are my opportunities to improve them? An improved EBITDA will improve your loan rates. It'll improve your ability to get a loan in the first place. So really diving down into your current opportunities and maximizing those before you go on to expansion would be my recommendation.
Okay. Michelle, thoughts from a CPA perspective on that? Any additional comments?
Totally agree with what Mary's saying. And from an expansion or new location, one thing I would suggest is that you keep in mind what's called a cost segregation. And that is, it requires an engineer to go through everything. And it's based on the code for where you live. And it might say that you are required to have 2 lights in each room, but maybe you have 6 lights. So those other 4 lights you're going to be able to expense faster than you can the 2 that are required. So again, I can talk forever on the cost seg, but if you are planning that, just ask your CPA about a cost segregation.
Okay, any additional comments on that?
And I'm going to say that if your accountant says, I don't know what you're talking about, it may be a good idea to consider another accountant. There are a number of practices I work with over the years, and they have never heard of a cost segregation study. And we've had clients go through them, and it's saved them substantial money. So if you don't know what that word means or have any idea about the ins and outs, that's okay. But your accountant should, and he or she should be able to give you guidance.
Okay, thank you. I have a question from a new hospital. It's my first year I'm doing, and this came from somebody on the webinar here. New hospital, first year doing year-end inventory. When it comes to inventory tax this year compared to next year, are we just taxed on the difference between the two for the subsequent year? Michelle, I think that's for you.
Yeah, unfortunately, that is not the case. What you're taxed on is the physical inventory that you have in-house. So it's not that difference, it's what you literally have.
Okay, thank you, and keep questions coming. This is really good. I want to talk about equipment now. And Michelle, I'm pretty sure this one's for you because we're talking about Section 179, which we definitely need to define what Section 179 is, and bonus depreciation rules. So should I be buying some equipment at the end of the year?
Again, I'm going to go back to my statement, the tax tail doesn't always wag the dog. And I think Monica alluded to it as well. If you don't have the cash flow, you can't buy the equipment. But if you do have the cash flow and you need that piece of equipment, it is a good idea to purchase it. And again, it goes into that whole tariff thing we were talking about earlier as well. Now, what the 179 is, it's code section, IRS code section 179. And what it does is it allows us to write off that piece of equipment in the current year. So you buy a $50,000 piece of equipment, we can write it off, we can depreciate it, is what we're basically doing, and taking that expense on that profit and loss, thus lowering our tax liability. And the bonus depreciation, tax law is going to change next year. We don't know what it's going to look like. As it stands right now, that bonus depreciation is up to 60% of that fixed asset. Previously, it was up to 100%. So we're just going to have to hang on tight and see what comes out of Congress as far as that goes. But again, ask your CPA about it. It's always good to kind of walk through the numbers.
Okay, thank you. I want to switch to pricing strategies now. Please keep the questions coming, but I am going to watch our time here. There are two key areas for pricing, two key areas, pricing and cash flow, that I really want to focus on. And Andrew, let's talk about it from your lens. What adjustments should practices consider that they make to their pricing at the end of the year to improve financial performance? What about year-end promotions? I mean, what do you do with your group of practices?
Absolutely. And again, for our group, we don't wait to the end of the year. Really, pricing should be evaluated year round. I know a lot of people love to sit and wait, and we got prices coming up, and January 1st we'll hit the go button. For example, our group of practices initiated our price increases in October. One, clients are always looking for that at the beginning of the year. Everybody sees price going up. You might have some grumpier clients if you wait, although they expect it. But pricing increasing should be a year-round thing. Again, pay attention to those emails that come from your vendors. Unfortunately, they sneak into all of our email boxes. Hey, price increase, here's your new sheet. And they come year-round. So absolutely, again, the bulk of those pricing increases will be coming here at the beginning of the year. a simple price per percentage increase is certainly a reasonable decision, especially when most PIM systems easily allow for that increase. If you are able to have the time, again, the stories and the numbers and the data, sometimes a percent increase, especially when if you have doctors that are on commissions, for example, that becomes a floating algebraic equation, and your margins may ultimately shrink with just a simple percent increase. So be thoughtful when we're thinking of increasing, and don't forget to increase services. Oftentimes we can very easily think of the COGS, right? This Perfecto went up, this HeartGuard went up, but please don't forget those services. So important.
Thank you. It's the end of the year, and on the supplier side, there's many times when suppliers, corporations are trying to hit their own year-end numbers. And I would imagine that many of our inventory managers on this call are going to get those emails from suppliers saying, hey, I've got this deep discount, which seems great for the practice, but is there any catches? And Mary, can you take this one with some tips on negotiating these better deals with vendors and trying to leverage, buying power?
Yeah, absolutely. Again, data is always king, but I will generally not recommend taking on a bulk purchase at the end of the year for all of the reasons that Monica and Michelle and I and Andrew have discussed. It's a carrying cost on your shelf, and it's understandable why the suppliers don't want the carrying cost on their shelf, because it's just an added expense. Yeah. So again, really going through your data and understanding what that bottom line value is going to be. Is it 10%? Because then I'd say no. If you're talking 50 to 70% of a frequently used item, now I'm going to be looking in my system to see how much do I use of this, and can I make a bulk purchase just to get me through the next 3 weeks, just to get that 50%, but get rid of it before the end of the year. So yeah, I definitely say just be careful of taking on that cost of carry from your suppliers. What I'd actually recommend is improving your demand planning with your supplier partners so that neither of you are left with those big bulk cost to carries at the end of the year.
Thank you. So going to ask for a tip here. So everybody that's attended this webinar, you've invested your time in the webinar, we want to give you more tips here and really talk about organizational or operational changes, I should say, to benefit the independent veterinary practice. And Andrew, you're a corporate group, right? You're a group practice, and you're using some key metrics here to review at the end of the year. Share that with the independent groups or independent practices that are here on the webinar. What tip would you have for them to really help with their year-end strategy?
Again, unfortunately, I don't think I have just a golden apple here for you. The same tips for corporate group are going to be the tips really for independent practices. Again, looking at your cash flow, do you have that for if you want to make those end of year purchases, those equipment purchases, making sure you're in a strong position. Again, just controlling those COGS, making sure your taxes are as lean as possible. Those are really those key metrics that we also look for.
Thank you. We're getting ready to close up here. We've got 5 minutes, folks, but if anybody has a question, please put it in the chat. I want to talk about one strategy this month to improve financial results. What would you recommend? Anybody can go. Mary, if you have a thought, just one strategy here.
Check your costs. That's it. So a lot of practices, private, corporate, doesn't matter who, they're using markup on a cost. And what they really need to focus on is your cost data correct? Do you have a cost in your system that's from 16 years ago? And so your price to your client does not actually reflect your up-to-date cost. It's where I've actually found almost more COGS savings for practices than even through negotiating with my suppliers. Is really, do I have my costs up to date? To Monica's previous point, is it list cost versus the cost I've negotiated and discounted? Because it should always be that list or wholesale price, and not the extra discounted cost on that. I think by just making sure all of those are up to date in your system, is going to make a huge impact on your bottom line, and give you more capability to take care of your practice and your staff. So again, data. You can have tools like Inventory Ally help you, but it's all back to making smart decisions given good data.
All right. So how can practices use the insights gained that we've discussed here from like a year in review, right? We've discussed doing the inventory counts. We've gone through a number of key items here, but how do we use that all to set goals for 2025? Because we want our inventory managers to be successful. We want them to go to their managers and say, here's my year-end close, but here's my recommendation, boss, for what we should be doing in 2025. That's why everybody's attending this. We want to give them something that they can take away to help them improve their practice next year. Thoughts on that? And we're doing good. We have 3 minutes left. So please feel free to chime in another question. And my expert panel here, who wants to address that one?
I'll throw in a quick one and then I'll let it go. But
Okay.
yeah, I would just say really work with your supplier partners. They are more valuable than people realize. You can leverage a GPO partner, look into one of them. Honestly, they will help your growth and your bottom line more than just the cost up front. So if I'm going to recommend something to anyone besides getting your data, getting visibility to data, that's number one. Number two, really lean into your supplier partnerships and make them a priority focus of your 2025.
Thank you. I have time for one more of our panelists to provide a comment on this actionable goals for 2025. Any other thoughts?
I was going to say, adding on to what Mary said, look at your financials. That's kind of like your report card. So if you're like, okay, they're telling me to do all of this and that, well, what did your inventory cost you? Was it over the benchmark of 14 to 16%? What is your lab costing you? Is it more than the industry standard of 4%? So if your numbers say that you spent about 18 or are going to spend about 18% of your revenue on inventory this year, I'm going to say, well, whatever you did in 2024 worked pretty well. So not much is broken there. But if inventory was costing you 28, 32%, then we need to look at what in the world went wrong as to why inventory is costing us more than it should. And there are 5 causative reasons that inventory will cost a practice more than it should: shelf life, embezzlement, duplication of product, improper markup, and factor of income. If your fees are not set in a way to offset the costs, then obviously that could skew those numbers as well. So I would say, look at your numbers, and your numbers will tell you what you need to do. And you can use SMART goals. You can map out that we need to reduce our inventory by 3% or whatever the case may be. But those numbers should be the driving force of this is what needs to happen in 2025 based upon how we were performing in 2024.
Thank you. And wrapping up, this webinar was brought to you by Inventory Ally. For those that don't know, it's an inventory management platform for veterinary hospitals designed to do exactly what we've been talking about here: reduce inventory costs and save time. I want to thank all of you, all my experts, for participating in the panel. Inventory Ally will be sharing a end of year checklist. That's what we've been talking about to help everybody. And I said everybody should wait to the end because there's something special for everyone. Inventory Ally has a special offer only in December. You buy 6 months for you get 6 months for the price of 3. So there's a QR code that you see displayed on the screen that will allow you to learn more. Thanks again, everyone. We really enjoyed this. Thanks to my experts. And most importantly, thank you to all the inventory managers that took time out of your busy day to learn.